Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday the 22nd of April 2020. And yesterday we published a video entitled Oil Price Slumps Further, So Do Gold and Silver Prices. And on Monday, oil prices slump, WTI below $13. What does this mean? Where we have seen WTI crude prices actually fall into negative territory, at least as far as May contracts were concerned, which ended yesterday. Currently, the new June 2020 contract is showing WTI crude prices at $11.30 a barrel, and Brent Crude at $19.75. Who would have believed it? A barrel of oil for less than 1 ounce of silver. But that said, the purpose of today's video is not about oil. Today we're just going to take a brief and perhaps scattered look at other economic data and statistics around the world. We were planning on doing a comprehensive video on the US dollar, but we're still awaiting some research which we hoped we would have had in our hands today, and it looks like it may be a few more days before we will actually receive it. So we will comment on it then. Meanwhile, let's take a look at some interesting economic facts and figures. Now, the time currently is just past 13:30 GMT plus 1, and just over an hour ago, it was announced that Britain's inflation rate has fallen in March, as oil prices have fallen and shoppers have become more cautious. The Consumer Price Index was 1.5% higher compared with March 2019. As a Reuters poll of economists had predicted, slowing from February's 1.7% rise. A fall in clothing and footwear prices was the biggest drag on the index in March. Bank of England Deputy Governor Ben Broadbent said on Monday inflation in Britain was likely to fall below 1% in the coming months. Some economists warn inflation could slide to 0.5% in 2020 as the economy shrinks. Petrol prices at the pump fell by 5.1 pence per litre between February and March, the biggest drop since December 2018, as global oil prices tumbled. Sarah Hewen, senior economist at Standard Chartered Bank, told the BBC's Today programme, quote, "Normally, low inflation would be welcomed, as it means people have effectively more to spend in the shops, but these are not normal circumstances. The fall in inflation, in addition to low energy prices, is an indication of the steep recession we will see in the coming months." Unquote. Also, March retail sales in Scotland fell by 13% compared with the previous year. It's the lowest figure recorded there since the monitor began in January 1999. The chief executive of Burger King UK has said that the fast food chain has not made its rent payments for April. Alistair Murdoch told the BBC's Today programme that he could not see the firm paying for some time to come. Burger King has some 500 stores in the UK. Germany's public sector deficit will likely widen to more than 7% of gross domestic product this year. Public debt will also increase after several years of declines, rising to around 75% of total output, according to the government's latest fiscal report for the European Union. Chancellor Angela Merkel's ruling coalition has suspended its commitment to fiscal prudence after years of running balanced budgets. The government has put together a package of emergency measures worth more than €1 trillion, or $1.1 trillion, and plans to sell a post-war record volume of bonds to help finance it. Back in America, a quarter of working Americans believe it's very likely or fairly likely they will lose their job or be laid off in the next 12 months, according to a Gallup poll. In the 3 weeks ending April 10th, 4 days before the survey closed, nearly 19 million Americans filed for jobless benefits. Some economists see unemployment topping 20% as soon as this month. And we've commented on that in previous videos. Expectations among minority households are even more dire, with 32% of working Americans of colour saying that they are likely to lose their jobs or be laid off in the next 12 months, compared with 21% of employed whites. Net asset purchases for G7 central banks approached $1.4 trillion in March. The ECB's bond holdings are on track to total around 3.7 trillion euros, that's $4 trillion, by December, equivalent to about a third of Eurozone GDP. More than 1 trillion euros will be added in 2020 alone. The European Central Bank is already helping out by skewing its asset purchases towards Italy to keep bond yields down, though yields have risen recently in a sign that investors are testing how far it will go. It has loosened its rules on what bonds are accepted under its purchase and collateral programs, and in a call on Wednesday may discuss accepting more non-investment grade debt, known as junk. It already does this for Greece. Does 2008-9 crisis suddenly spring to mind, we wonder? Now, Italy's government expects the budget deficit to rise to more than 10% of economic output this year. Prime Minister Giuseppe Conte's administration is drawing up an economic and financial plan to be approved by Cabinet at a meeting expected as early as this evening. The government is set to ask Parliament for authorisation to broaden the budget deficit by about 55 billion euros, or $60 billion, to finance a new stimulus package. The country's gross domestic product is expected to contract by about 8% this year. Bank of Italy has said that the economy shrank by about 5% in the first quarter, and Bloomberg economists expect the country's GDP to shrink more than 13% over the full year. So this sort of picture is duplicated across many Western and Eastern countries, in fact. So it's not a pretty picture, and one really quite alarming for the future. You see, what is currently happening among central banks and governments are the instruments and derivatives they shall be using and creating to delay any negative impact of the global growth slowdown, as we repeatedly said that they would many times before, is, in other words, MMT in disguise, modern monetary theory. In other words, spend yourself, or borrow and then spend yourself out of recession. Eventually all of this has to be paid for, and we still do not know, even now, the extent of the damage to global growth, business and industry. Global debt will rise dramatically, and the price will eventually have to be paid, albeit perhaps, and we suspect, a fair amount of time down the road. Meanwhile, a little bit of humour, I suppose, one area of the economy is doing well, and that's companies like Netflix, and I suppose Zoom as well. But Netflix has recently added some 16 million new sign-ups in the first 3 months of this year, so it's not all bad, providing, of course, you have shares in Netflix, that is. Now, meanwhile, gold has edged up just over the $1,700 level and is currently $1,704. And silver has also edged above the $15 level and is currently $1,501. But this extends slightly further the gold to silver ratio of 113 or to 113.5 to 1. And we are expecting a little more strength during the course of the week, and certainly as a result of tomorrow's weekly jobless claim figures. Interesting information, but not very optimistic overall. Do share your thoughts on any of these areas that we've just covered. And meanwhile, if you haven't already done so, please subscribe to this channel, not forgetting to press the bell sign so that you're notified of our videos as and when they're published, and also kindly go over to our Richard and Greg channel and hopefully do the same there. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.